When the COVID-19 crisis hit European societies in March this year, and obviously also the European economies and financial markets were hardly hit by the COVID-19 health crisis, the role of ESMA was first and foremost to really increase its coordination activities among European securities regulators to better understand the developments of the crisis in the financial markets, to understand where the stress was in the financial system, in the financial markets, and to increase really the sharing of intelligence among securities regulators. But the role of ESMA was not only to improve an understanding of risks and stress in the financial markets, we also had various policy responses. For example, we provided relief to market participants, helping market participants better to focus on the continuity of their business. We have delayed certain reporting requirements, for example, and we also provided guidance on how, for example, banks should cope with the obligation to tape their conversations with clients around trading, possible buying and selling of shares or financial instruments, and how this obligation to record those conversations could be done in a situation where most of the staff of banks was moving from the offices to working on a remote basis. We also provided guidance on the important issue of how to assess credit losses, how to take into account the repayment moratoria, and this of course all relates to how IFRS 9 should be applied in this very exceptional situation of the COVID-19 crisis. What we have seen in after the first phase of the COVID-19 crisis is that markets have recovered. Many valuations are back up to the levels of before the COVID-19 crisis, or being very close to those valuations. And this has raised concerns with securities regulators around a so-called decoupling of the financial markets from the underlying economic situation. The underlying economic situation is grim. It might even further deteriorate depending on how the second wave of infections, how it will develop. But obviously this decoupling raises the risk of further corrections in the near future, and also possible impacts on liquidity in financial markets. Looking at the recovery, what I think is very important is that capital markets can play an important role in the recovery that will inevitably be developing. We know that the European private sector was already highly indebted before the COVID-19 crisis. It is therefore so important that in the recovery is that is not only funded with additional bank funding, which would further increase the indebtedness, and actually it's already happening now, of the private sector in Europe, but also is that the equity can play a role in the recovery of the private sector in the EU. There's another element to that, is that it's also very important is that in the medium to long term is that households, retail investors play a more important role in the development of the capital markets union. They are a key pillar of a successful capital market union, and obviously it would help households to get a decent return on their savings. And I would hope also is that banks, retail banks, can play an important role there. We know that in Europe the most important distributor of financial products are banks, and I would hope that in that role as the main distributor of financial products, as the provider of advice, is that more and more households can participate in the capital markets. Thank you very much for your attention.